Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. All of a sudden, the US equity market under a little bit of pressure, fallen over 500 points in the last couple of days. Some of the data was a little bit softer, but the main reason now is President Trump has come out and said that the deal with China, it really just depends on whether he wants to make it or not. So, just last week we had, him coming out and tweeting that, the deal was very close, phase one was very close to getting signed. Now we've got almost a complete U-turn and saying, actually, I'm in no hurry to make a deal. It's a question whether I want to or not. It appears to be that, the good of the country is sort of taking a back seat, and it's really all about President Trump and what he wants to do. Now, maybe this is just a bit of a backlash, as obviously he's facing a little bit of pressure on the sort of political front, certainly with the impeachment inquiry. It's really not going according to plan. But also as well, it appears to be that he's losing the legal battles with the banks trying to sort of block his financials being released. This obviously all playing out in the backdrop with the, going into the presidential elections in 2020. It's just going to be very interesting to see how that sort of all plays through. Because certainly on the evidence so far, if this deal with China isn't done, you get the increased tariffs coming through on December the 15th. That does put a little bit of a handbrake on the US economy. And if that, sort of drags into the election year and people start losing their jobs, a little bit of slowing of growth, etc., etc., then, potentially President Trump's sort of campaign trail of Make America Great, creating jobs, etc., doesn't look quite as rosy. Certainly interesting times ahead, and it's just going to be interesting to see how that sort of plays through as well with the Fed. At present the Fed seems to be on hold. They've sort of cut enough so far. Going into sort of 2020, potentially there is another sort of cut coming in the first half, but really not much more. Well, that's certainly what the market's telling us anyway. Oil initially had a little bit of a spike, but I suspect on this, potentially sort of slowing growth, the global growth scenario, that will sort of fall back a little bit as well. Now in the UK, it's really all about the election on December the 12th. At the moment, the Conservative Party have a reasonable majority, and just going to be interesting to see how they have enough of a majority to sort of get Brexit through. Because certainly, if you do have a coalition, then, Brexit's really back in the melting pot. Here in Australia, Reserve Bank left rates again unchanged, but potentially, still looking for sort of further rate cuts next year. Obviously, the official cash rate is 0.75. Most of the banks are sort of forecasting at least a cash rate of 0.5, if not 0.25. And once you get to 0.25, you then potentially see quantitative easing coming into the Australian economy. Now that's obviously a way away because at the moment the Australian economy showing a little bit of signs of sort of picking up. Certainly on the housing front, that sort of come through reasonably strongly in the last sort of couple of months. Potentially it is a bit of a trend forming now. It wasn't just a sort of a 1 month wonder. Similar story here in New Zealand. Certainly the housing market is sort of picking up a little bit, buoyed by maybe sort of, the spring, summer weather. But certainly, obviously the low interest rates having a reasonable impact as well on sort of house purchases. So that is starting to see a sort of a little bit of a sort of nudging up in prices. Interesting data out this week show the average house price for New Zealand is now above 700,000. But here as well in New Zealand, the Reserve Bank, firmly on hold at present, although most economists and analysts predict a further rate cut, certainly in the first half of 2020. That'll take the official cash rate below 1%. Now, if that is the case, people wouldn't expect mortgage rates to fall by sort of a quarter point if you saw a quarter point cut on the OCR, but certainly it will sort of nudge down mortgage rates again, and that will just, add a little bit of further support and a little bit of buoying to the housing market. Certainly overall, New Zealand isn't doing too badly. Growth is reasonable, but again, an election year next year, and it's just interesting to see what sort of comes out. Certainly in terms of sort of infrastructure spend, government spending, and obviously also potential tax cuts as well. Now, in this low interest rate environment, if you are interested in discussing what is available, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.